Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. Going to start off like usual, and I don't know if I've used this one before or not, but I like it, so I'll use it, whether I used it before or not. But quote goes like this: I never make the same mistake twice. I make it 5 or 6 times, just to be sure. If you haven't experienced this in the market yet, then you haven't been trading. It's pretty much kind of what we do, right? We just got to double, triple, quadruple check to make sure that we did it wrong the first time. So, but it's all a learning experience, right? So we just take it and run with it, learn from it, and move past it and keep working at it. So with that, let's get right to it. We're going to do the big guys here, and only 17, and there's 2 or 3 or 4 that have earnings. I think most of them come out tomorrow. So those are kind of basically just kind of wait and see until earnings come out. But overall, with the rally the market's had the last few days, there's not a whole lot of anything spectacular that I could see. This is one right here, just starting off with Aflac. Not terribly excited about it. It's very similar to the market. We've got gaps the last 3 days and light volume. So realistically, it's bearish. The look is definitely not bullish. And as you know, I'm not excited about using resistance or support. I prefer breakouts. But so we'll see if this thing breaks off up to the downside. Then there may be an opportunity here. If the rest of the market rolls over and this bounce that we've had is just that, it's just a short covering rally. Seem to be some pretty solid buying today, though. So hard to say. It's hard to say if it's a short covering rally, if it's short-lived, or if it's actual genuine buying and it's going to continue to the upside. I'd be surprised if it doesn't at least pull back a little tomorrow. Having another rally a 4th day in a row would be highly unlikely. It happens, but it's pretty rare. So moving on to Alnilam. I can't even pronounce that. That's just a weird Alnilam? No idea. But this is one also, again, not terribly excited about the bullish. We've got a big bullish engulfing pattern after the earnings play there. Zoom way in here. And then we've had the last 2 days that have shut that phone off real quick. Thought it was off. The last couple days have continued to rally, but the volume's gotten lighter and lighter. Pretty significant drop in the volume. So it actually looks a little bit bearish, but this very well could, considering how oversold it is. I mean, we're 140 less than a year ago. Now we're hitting 55, 60. We're 60% lower. So a bounce to the upside, kind of like we had back here, wouldn't be a big surprise if it continued to rally from here. So that's what I'm looking for basically here is a little bit of a just a quick pop. And really, you look at it, 67, almost 68 up to 74. That's almost $7 worth of rally. So it doesn't look very big, but that's a good 10% move. So could be a nice little profit with an option trade. So Ameriprise, similar type of picture. And in fact, most of these are the same. That's why this will be relatively short tonight, because they're almost all the same. You got a big rally in the market. Everything's rallied with it. 3 gaps in a row. Boom, boom, boom. And volume getting lighter. Am I excited about the bearish move on this? Or excuse me, the bullish move? Not really. But we got to look at, it may continue. If it does continue, you want to be there to take advantage of it. Again, this is almost $7 of potential there. So there's definitely some good looks. Bungie, big earnings move. This is when you wish you had puts on it, right? It goes 58 to 48 overnight, 47 really. And even though the market rallied strong today, this thing was off by $1.76. So it looks pretty good for a bearish move. We got about a little more than $6 of potential there, which is a good 12, 13%. And it doesn't look like this thing wants to go any higher. So everything is looking good for a bearish there. Baidu, another one, like most of the others, gaps the last 3 days, big move to the upside, but volume getting lighter. Could it continue to rally? Yeah, but the odds are against it. So we'll see what happens with this, along with many of the other ones. So Bluebird, this one looks a little better. There's the challenge, though, you see, is earnings. This is that pharmaceutical that's been on the radar, or biotech, that you can see what it did. I mean, it was $25 just a couple of years ago, and then it ran at 200, and now it's back at 50. In the last year, it's dropped off to 50. So it's been cut by 75%. Excuse me. Bands are pinching, and you can see the huge bullish divergence with MACD that has been happening for 5-6 months almost. So a big rally from this would not be unexpected. And you can see, even though it may not look like much, you're talking 53 to 65. That's 12 points on a $52 stock. That's almost a 20%. That's over a 20% move. But there's the hard part, is earnings coming out on the 23rd, which is what, a week from, or it's Tuesday, next Tuesday. So it could have a big rally into earnings with big expectations. It's possible. If these guys are really that big of a deal and they're worth $200, then I would imagine somebody from that sector would come in and snatch these guys up. So they may be a buyout candidate. In fact, it'd be interesting to see what the open interest on the options looks like. If there's really huge open interest on futures, on the future options, especially looking out a few months, this may be something to take a little closer look at. So moving on to ED, Consolidated Edison. This has been very bullish. In fact, I think this is an all-time high. It is. All-time high. It's pulled back. I mean, you can see the rally from 60 to 73, which compared to the ones we've been looking at doesn't sound like much, but for a utility, it's a pretty big move, 20%. Had a nice solid pullback here, and we have earnings which come out tomorrow, so a lot of it's going to depend on what happens with earnings. But trend's headed to the upside. So even though this has been down against the market, if the market rolls over and this thing goes back, and this is, I think part of the reason this is going up when the market's going down is people are looking for safe havens. Just like gold. I mean, you see gold's rallied 20, 30, 40% in the last week and a half, 2 weeks. So there's the other challenge, earnings as well. Yeah, we talked about that. But so it looks like money's moving into the safe areas. Even, gold was actually up a little bit this morning. At least gold stocks were. By the end of the day, they had trailed off a little bit. So EQT, oil and gas. No, this entire sector, the entire industry has been extremely oversold, sold off big time. So this was 110 a while ago. Now it's at 60, which actually, relative to a lot of the other ones, have been cut by 80, 90%. This is decent. But look at the volume on this thing. It's pathetic. I mean, 3 days ago on Friday, it was, what's that, 1 million, when the average is up at 2.6. And the last 2 days have been not quite 2 million, so a good 30, 40% drop in volume. So, yeah, not terribly excited about the bullish move. Even though it's looked, in the short term, we've got higher highs and higher lows, so it looks bullish. A little skittish about it. Entergy, another utility, electric utility this time, again, is pulled back a little bit, just like, who was it, Consolidated, has earnings tomorrow. So if this thing takes off, and you can see the pattern there is the ascending triangle, that we've come back and tapped that previous high. So we've tested it several times here. So I like the looks of this if it moves higher. So we'll see what happens with the earnings tomorrow on that. FedEx, another one that you can see the volume on the move to the upside. 123 to 134, a good 11-point move, 9-10% in just 3-4 days. But very little volume to support it. So looking for a breakout to the upside. It could continue. All we need is a 2 or 3 day move to that. There's 6 points there. So we'll see what it does. Ingersoll Rand, another one, basically the same picture. I mean, there's no difference between almost all of these, which is what makes this week challenging. So moving on, Procter & Gamble, this one's a little bit better. This is one from last week that we had as a rollover. This is the only one, interestingly enough. It's funny how last week we had, 60% of them were rollovers from the week before. They were still candidates. This week we have 1 out of 17. So it's interesting to see the flip, which is basically what the market did, right? So looking for a break to the upside. So we'll see what happens. That one actually I kind of like compared to the rest of them. This one I like too, Polaris Industries. Excuse me. Which this is the part that blows my mind. Polaris and Leisure Products. Hey, they were since the early mid '90s. Stock looks like there's been a few splits. Maybe you can't tell all those dividends in there. There's a split, 2-for-1 split. There's one here somewhere. Let's do unadjust. Okay. So it was realistically a $20 or $30 stock. It's got a couple splits in there. But when you look at this, you go, okay, in '08, after the market cratered, bottomed out at $6, about $6.50. And from '09 to '15, this thing ran all the way to 150. It's like, really? I know Polaris. I've ridden their snowmobiles, and yeah, they're in the leisure product industry. But how do they go from 6 to 150? It's kind of crazy, and it really just seems unsustainable. Which, as you can see, pretty much is what happened. We went from 153 to 70. We got cut in half in not quite a year. Just basically a free fall. But right now we have an inverted head and shoulders. And as you can see, I know today's candle give a nice breakout. Nice breakout without much volume. Big volume obviously would have been a lot better. And on the inverted head and shoulders, as you know, if you've been through patterns in a flash, it is more important to get more volume on the breakout on an inverted head and shoulders than it is on a traditional or a bearish head and shoulders. The beauty is we got almost a little more than $15 of potential, which is huge. Another 20% run if it takes off. But again, we've had a big 3-day move, which the volume has increased each day, but it's still not that spectacular. So a little skinny. I would rather actually see this go sideways for a few days or maybe pull back and tap the neckline before it takes off. That would be ideal. Philip Morris. See, here's one of the interesting ones. Tobacco. They do food, beverage, and tobacco. So if the economy's getting weak, what happens? Everybody starts drinking. Start smoking, drinking. So it's a reality. But this thing is broken out. A decent chunk of volume, actually, on a good breakout. So I kind of like the looks of this. I'd like to see a little pullback on it first. Another inverted head and shoulders, very similar to Polaris. This is in the transports. And again, very similar without a lot of volume pushing to the upside. So breakout, really small breakout. So not terribly excited about this one either. So we'll see what happens. Verizon, this is another one. I love flags. I love pennants. But, man, in the market conditions we're in, it's hard to get fully on board with this when we're in a bearish trend and we've got an extremely bullish look. Even though, you can see the big volume push that we had on that flagpole, and then it's dried up a little bit on the flag. So a breakout of this, I'd actually be pretty comfortable with a bullish position, especially if the market continues to rally. In fact, that may be something that I haven't done this for a while. Actually, I haven't really had a need to. But do a scale-in position right there. Dash dot. Might be somewhere, pick up just a little bit, about, 50 cents ahead of the original entry point. Yeah, pick up a small position, a little starter position. And then if it takes off and keeps going, add to it. Just add a little gravy to it. Last but not least, Waste Management. Earnings, there's the challenge. Earnings is tomorrow. It has broken out. It is an all-time high. Again, you got a huge move. Just in the last 4 days, 52 to 55, which doesn't seem like much. This isn't a huge mover, but we'll see what earnings brings. We'll have to wing it from there, but we're at an all-time high. So there we have it. Pretty short and sweet this week. Not terribly exciting with the move that we've had in the market the last couple days, 2 or 3 days. Makes it challenging. Not a whole lot of patterns showing up, and nothing terribly exciting. So just kind of go into a holding pattern, just wait and be patient for something to develop, and then take it from there. So you'll have a great night, and we'll see you soon. Bye-bye.